Good morning. Thank you for joining us for today's coffee talk, where we'll talk about loan data. My name is Sean O'Brien, the president of QuickRate, and am pleased to be joined today by the star of the show, David Littleton. David, you want to go ahead and introduce yourself?
Yeah, hi everyone. I'm David Littleton. I'm Director of Data Analytics and Product Management at IntelliCredit. So all of the data analytics and product talk that we'll be covering today, I'm kind of the expert at IntelliCredit in regards to all this. So happy to be here. Thanks, Sean.
Yep, thanks, David. We'll look forward to this. Just a couple of reminders. One, we are in presentation mode, so please use the chat feature or the Q&A feature to submit any questions while we're in the midst of the discussion. We'll monitor those and respond to them at an appropriate break or certainly at the end of the discussion today. Also, you will be sent a email likely on Monday afternoon with a link to today's recording and a copy of the slides. So again, thank you for registering and attending today's presentation. Again, the goal here today is to, again, just make you aware of some of the ways that using your data can be helpful to you and how we believe our portfolio analyzer can assist in that endeavor. Just to get started, we just have a few polling questions for you, actually 5 today. Again, I think one of the things that we've been very grateful for is everyone's participation and attendance in our coffee talks. I think today we're trying to get a little bit more granular on maybe things that we can do or demonstrate to you in future coffee talks about maybe challenges you're experiencing. And so some of our polling questions today are really trying to get at that. So with no further ado, the first question is, what area of your post-booking servicing could be improved? Now, hopefully you have some room to type it in. If there's any area that you think could be improved, just go ahead and submit that in the answer, and we'll just give this 30 seconds or so. Okay, thank you for submitting that, and we'll move on to the next question. What's the biggest area of improvement for your portfolio analysis process today? A, frequency of reports, efficiency of report generation, stress testing, or other? Again, we'll just give this 30 seconds or so. Thank you. We'll go ahead and share the results on this one. So stress testing and report efficiency and report generation, and other being the final one. So thank you for answering on that. Next up, just risk reports. What reports would help you better manage your risk? Again, the opportunity to type in any comment or answer that you like. And again, we'll just give this 30 seconds or so. Thank you again for submitting. We'll move on to the next one. Just around core data, what challenges do you have getting data from the core? Again, an opportunity to type in any comment or answer that you'd like. And moving to the final question, thank you again. Finally, just portfolio analysis improvement. What area of your current portfolio analysis could be improved? Just again, the opportunity to drop in an answer. Okay, well, thank you all again for participating. We'll share those results as part of the follow-up email. So again, I think in the last couple of coffee talks for this, we've just trying to share some of the things we're hearing from our banks, what we're seeing in loan reviews, and again, where we think opportunities to better mine your data or have your data available is helpful. I think concentrations are certainly one of those. I think in the loan reviews that we're doing and in the regulatory exams that we're kind of hearing in the wake, clearly still a heightened concern around commercial real estate and potentially any over concentrated area within a bank. I think a lot of the pushback, I shouldn't say pushback, but the response to that has been to be able to give regulators confidence that we have a good grasp and handle on those portfolios. Some of the ways that we can do that is in the granularity and specificity of what our reports can show. It could, again, some of the basic ones, but also then to be able to demonstrate what LTVs are, what debt service coverages are within those portfolios and subsets. Give a strong sense of confidence that, again, we are on top of what some might see as our most vulnerable areas of our loan portfolio. Again, I think this is really an opportunity where the portfolio analyzer, kind of excels. And so we just wanted to mention this as an example of A, what we're seeing and hearing, but B, how the tool can be of assistance to you. So at this point, I am going to turn it over to the star of the show, David Littleton. And David's going to walk you through, again, just some of the value in your loan data analytics. David, I will stop and let you share.
Perfect. All right. Thanks, Sean. Good morning, everyone. Yeah, so loan data analytics, why is it important? First and foremost, it's important because your loan data and your loan information and the quality of your loans is the DNA of your portfolio. It's kind of like in athletics when you are what your record says you are. And that being said, the DNA is always changing. And so every month, maybe even more frequently than every month, the profile of your portfolio may change and your DNA is changing. And so we really want to encourage bankers to be proactive about mastering their DNA and understanding their DNA. And that involves keeping up with the changes that are happening in the portfolio over time. And it's very difficult to be proactive when your process is difficult. If doing loan data analysis is difficult, then you may do it less frequently. There may be less quality involved, and therefore it's harder to be proactive. And what proactive means is transitioning from the what to the why, and understanding not only what is changing, but why those things are changing. And when regulators lead with their concern and you have your proactive mastery of your DNA already curated, cultivated, you can provide the why very easily to regulators who may come into the bank and understand the what and look to you for the why, so to speak. So loan portfolio data analytics, how easy is it with IntelliCredit, really? So with us, you just send your loan data file. This may be something as simple as the ILDR loan tape, the regulatory file, or any file that is being utilized already at the bank for reporting purposes. We load that data into our analytics platform, and we have a 1-hour training call, and then you're off to the races. That's it, right? And so we have a little graphic here that outlines the responsibilities of your bank versus IntelliCredit. And we really make the whole process very, very simple. It really is easy to gain value with minimal effort. But also there's potential for you to build your own reports and put in a little extra effort to get a little more out of some of the automation in IntelliCredit. So one of our clients, Nate Oval, who may be on.
Oops, sorry, can I just jump in there? Could you go back to the previous slide for just a quick second?
Yep.
So I think one of the things that, again, I think we want to emphasize here is A, it's obviously easy to get started with this, but B, David and our team is not going to walk away from you. So we're going to get you up and going. But I think one of the most, again, interesting and really advantageous aspects of this 3-month trial is each month when new data gets updated, you're going to be able to speak with David and our team again about maybe something you're trying to run, something you're trying to build. He's going to give you, suggestions as well about how to maybe, even improve your data. And so it's really A, it's easy to get started, but B, it's incumbent upon us, and we take very seriously the idea that we're not going to not assist you and get you up to speed to trying to, again, better mine your data as effectively as we can. And so I think I just wanted to emphasize, we're going to get you started, but then David is going to be with you on a monthly basis to again, kind of improve the process and hopefully get you even further ingrained and educated in the tool. All right. Sorry, David.
No, thanks, Sean. So while Sean was speaking, I see that Nate Oval, the genesis of this quote here, is on the call. So hi, Nate. But Nate said, "The more I try different things, the more value I see and can derive from the tool. You can't break it, mess around, get dirty with your data, and you will find things that need to get fixed, etc." And that's a great quote, and it really embodies the way that we think about loan analytics and the way that we want bankers to use the analytics platform, not only for reporting, which is very valuable, but to dig into the data and to actually glean insights and get to know their portfolio on a deeper level. And so with that being said, we have a mix today on the call of existing users of the application, as well as users that aren't on IntelliCredit, but maybe on Quick Analytics. But so I want to just encourage you all at any point to comment in the chat, whether it's a question about the tool. There's no question too simple or too complex. We are monitoring the chat, and this is supposed to be as interactive as the audience would like it to be. So feel more than welcome to engage in the chat. So first and foremost, what questions can you answer immediately in the tool? So I'm going to transition to a little bit of a demo here. So we're looking at the demo environment for, this is Pawnee Community Financial, a fictitious institution. And what we're looking at are the default standard reports in IntelliCredit. So as soon as we map in your data, these are the reports that are immediately available. And these are also the reports that we package together every month and send directly to you. So even if you're a low touch user and you have other priorities and you can't invest a lot of time into building your own reports and that sort of thing, we just send you a PDF package, and I can click download here to just illustrate an example of what we may send you. This takes just a few seconds to download here. But let's say you sign up for the 3-month trial, provide data for 3 months. This is what you'll get every single month about your portfolio. All of these reports here, that obviously there is the interactive version in the browser, but we send you this PDF as well. So just clicking through a few of these, we have a loan quality report, a concentration report that allows you to view concentrations over time within specific subsets of the portfolio, a top borrowers and top relationship report, a risk grade distribution report showing the migration of risk in the portfolio over time, a past due distribution report, non-pass loan report, including non-accruals and TDRs if you have those, delinquent loans, a pricing for risk report, and a vintages report. So that's kind of the tip of the iceberg, what you get on day one and sent directly to you as an IntelliCredit user. Now, one thing that I want to transition to is you have the ability to build your own reports, and I'm not going to spend time and go into the mechanics of that. But what I do want to do is open up a set of reports that I've created for this presentation. So you can see when I changed my template here, and I have quite a few. But when I changed the template, the report pages that are available have now changed entirely. And so after I finish this demo, we're going to get into some of the tips in the slide deck that I have for you. But just a little teaser, one of those is to monitor key metrics over time. So this portfolio synopsis, again, this came from one of our existing portfolio analyzer clients. They built this report and they had several key metrics that they created, and they had some custom ones and so on, but these are just examples that I have in here, like weighted average LTV, outstanding balance, weighted average interest rate, and so forth. And what this table allows you to do is it allows you to pick your key metric and then track that metric over time. And each time you upload new data, the most recently available data appears on this report without any additional effort. You just open up the report page and everything is updated with that new data. So again, it's all about making that portfolio analysis easy, especially month to month to month. And that's exactly what this tool does. The next example that I have here, this is a variant of the relationship report that we have in the standard reports. But this particular report looked at the top relationships, and you can, of course, see summary information about each of the top relationships, and including the concentration of capital in those relationships. And then we have a breakdown beneath that table of all the individual loans in this relationship. So this is a very common report that a bank needs periodically. And this, again, is just an automated version of it, that every time you upload new data, everything is updated accordingly, and you can export the report within seconds, and there's really no additional work. The next one here, this one is new origination pricing. So this is where we get into some of the more nuanced features of the tool, where we added filters to this table and such. You can add filters up here. So this table is showing a breakdown of the weighted average interest rate at each risk grade for each loan officer in the portfolio. And there are only 5 loan officers for this institution. But it's filtered to only new originations. So it controls for a specific pricing period, and allows you to compare loan officer pricing within that period. And then you could even take it one step further and add, for example, something like an FFIEC code underneath the loan officers, and then see the full FFIEC product type breakdown at each risk grade for each loan officer. So the possibilities here are, don't want to say limitless, but close to limitless with how you can stratify the data and display things to fit the reporting objective or narrative that you want to produce. And then down below here, we just have a simple breakdown in the same format of new originations in the total portfolio by just FFIEC code. Then we have an upcoming maturities report that shows a table that outlines all of the upcoming maturities, as well as listing out what those maturities are in the next 30, 90 days or beyond. A watch list report. So the bank that created this report, this was one of our first clients actually. So they have a watch list report that's broken down by loan officer, where you can see all the watch list loans by loan officer. And again, this is a report that updates automatically. So they have query logic built so that it's only their criticized and classified loans that appear here. And then, so again, every time new data in a new month and a new period is available, this report automatically updates to that new period with no additional work. And then you can always go back in time. If I wanted to go to last quarter, I just did that and it snapped back to last quarter. So again, it's all about making this reporting as easy as possible. So in this report, they have all their loan officers, they literally use this as their core process for managing watch list loans. And they do that through this document upload and comments feature. And so the comments are all blank in this demo institution, but loan officers can come in here and make comments that allow them to track and manage their watch list loans in a transparent and organized interface. The next one here is delinquent loans by officer. Similar setup as the previous, broken down, but instead of by non-pass loans, it's by or watch list loans. It's by delinquent loans instead. And so you can see a list of all the delinquent loans by officer, including how the duration of the delinquency and so forth. And then very lastly, we have a concentration report broken down by industry. So this is showing the concentration of capital for each of these custom industry cohorts. And I think all of these are based on NAICS codes. And those are cohorted together to give you what you're looking at here. But you can show this as just about anything. If I wanted to see the extremely granular FFI or NAICS codes, I could click on that and see those extremely granular NAICS codes. I could show this by loan officer and so forth. So you have multiple ways to very quickly snap between different data stratifications. So those are all of the report examples that kind of give you a flavor of some of the reports that you can build that fit, again, your periodic reporting objectives and needs in the tool. And once you build them once, like I was illustrating, every time you upload new data, your report's ready to go. And if I wanted to export this report package with these custom reports, I just click generate the report. And then, as I did a moment ago, download the report. And then you have a hard copy PDF that you can utilize for your internal reporting needs. So with that, I'm going to transition back to the slide deck. So we have some data in our analytics. Well, no pun intended, but so in our platform, we can see which reports are interacted with and customized the most. And so the top 4 are here, and this is from the standard report layout. So the top borrowers and relationships, that's the one that banks utilize the most. That's a very important report, of course, where you can see your top 20, top 50 borrowers, top 50 relationships, or any other top 50. You could do top 50 industries, top 50 NAICS codes, etc. So that's the report that is number 1 our clients utilize and interact with the most. The next is the period comparison, where you can compare the 2 periods and see the change very easily that's happening between 2 particular periods in the portfolio. And then regulatory capital concentrations, which I demonstrated a couple times. We all know how important that is. We're hearing more and more from our clients that their regulators want them to stratify their concentrations by industry, like I just illustrated, or by other codes. And I mean, the most important the most important stratification is going to be whatever your policy is written as, whatever the policy limits are. You want to obviously be able to stratify by those definitions. And then lastly, the risk grade migrations, which show the way that risk is changing over time. And so all of these reports in IntelliCredit with the 3-month trial and with the subscription, of course, we send directly to you monthly. And you will always have the interactive versions as well. But I just want to illustrate that even if you put no effort into this at all, you will get this PDF in your inbox without needing to prompt us for anything. So now we're getting into a few tips that I have with, from my experience working with many banks, doing portfolio analysis, and obviously onboarding quite a few banks into this tool. So the number 1 tip is tracking your key data and metrics over time. So I teased this one a moment ago, but you want to track both transactional changes and portfolio changes. So on the right-hand side, we have a screenshot of portfolio changes over time. That's obviously very important for LTV, past dues, weighted average risk migrations, and so forth. But IntelliCredit also allows you to easily track transactional changes. So you can click on one particular loan and look at the life of the loan, how that particular loan has changed in terms of rate or risk grade or other factors, balance, of course, over time, over the life of one particular loan, which can, is when it comes to relationship management, can be very important in many instances. And just the bottom line is, and I think we mentioned this earlier, but it's just where you've been and where you're going, and understanding the metrics that we're looking at that are as of today, as of this most recent period. These are, you can make an objective decision on whether this metric is good or bad, but it's even more valuable and you can glean more insight when you're comparing it to historical figures. Tip number two is just the proof is in the numbers. So again, we want to proactively develop data-driven knowledge. So, you want to avoid the deer in the headlights. If someone asks, especially a regulator, asks you a question about the portfolio, you want to have something to go off of, something data-driven, and combined with your obviously qualitative experience with many of the borrowers that every community bank has. But being able to pair that with data-driven insights, and have an answer for that regulator, for that board member, whomever it may be, but then also have a tool where you can transition to drill into the data and show and demonstrate the things that you are trying to convey to these parties. And we're also seeing in the environment, as I'm sure most of the people on this call have experienced, the heightened regulatory focus, and especially around concentrations in industry and stress testing and so forth. And having an analytics platform that gives you better access to your data allows you to prepare for the changing landscape of regulatory questions and concerns. And again, you want to address those concerns with confidence and with data. And lastly, is think outside the box. And in banking, we don't necessarily do this naturally, but sometimes, the board has been receiving the same reports for the last decade, potentially. And so we don't need to think too far outside the box, but always be thinking about new ways that you can display data and deliver reports that provide the narrative that is most appropriate for the current landscape of both your bank and your lending environment. And focusing on the multi-layer data stratifications that I showed a moment ago, where you can look at a loan officer and then break that down by product type or industry and product type, et cetera, industry and risk grade. You have multiple ways that you can stratify that data in IntelliCredit. And once you have a tool that allows you this much flexibility and ease of use, you'll find that your creativity may come alive a little bit when thinking about the data. So another quote from Nate. Again, thank you, Nate. The standard reports are valuable as is. The ability to apply filters and represent the standard report for time frames selected is also excellent. Ability to build query and pivot table reports is also valuable, easier than core systems and internal bureaucracy to get at timely information. So exactly what we have been discussing, and we really appreciate Nate's comments here. So again, we're offering a 3-month free trial of this tool, no strings attached. It really is just you send us your data, we provide training, and then we have ongoing support, as Sean illustrated, during that period to help you build reports, help you get familiar with the tool. It's not at all kind of training and then goodbye. We have a very active support system in place to help you, again, build the reports that you're trying to build and obviously answer any questions that you may have. If you want to take advantage of the free trial, you can email either myself or info@intellicredit.com. There's also info.intellicredit.com/get started. Sean, are you trying to come on?
No, I was just going to say, Nate, put a comment into the chat box. So Nate,
Oh, I
thank you.
see.
Yeah,
Okay.
so I really appreciate it. And yeah, I think kind of speaks to what we're saying here, where just having access to that data at your fingertips, kind of on demand is really a powerful tool and should be in everybody's arsenal.
Yeah. Yeah. We'll have to add that to the slide deck next time.
Yeah, thanks, Nate.
Yeah. So we had a couple of coffee talks within the past about year with both Zane Smith from American Bank and Mitch Moss from Outdoor Bank. Zane is a really dynamic power user of the tool. He really loves data analysis. And so the recording of those are all available on our website. If you'd like to see him kind of drill into how he specifically is using that was a great video that we had. And then Mitch Moss uses both the portfolio analyzer as well as the loan review tool. He does internal loan review for Outdoor Bank in Kansas. And so he covered kind of the full gamut that we didn't touch on today, the analytics as well as the internal loan review platform. So again, if you have any questions or want to send us any more compliments in the chat, we're open to anything you have to say, and we'll obviously address any of those that come in here. So I'll just give it a second, I suppose.
Yeah, and while we wait for that, right? Again, I think I think one of the things we've David and I and our team has talked a lot about is again, trying to just sense what might be your any apprehensions to try take us up in the trial, right? I think worst case, you try it, it doesn't work, no harm, no foul. Again, I think we really, and I think David has done a great job of really trying to minimize not only the time to get your data in initially, but then as we've talked about, just minimize your initial time and even trying to get the tool to work for you until you get you gain and build that level of confidence that again we think can just really be an efficiency aid in your organization. And again, I think it could be something as simple of reports that you're having trouble producing, or things that again that you try to pull out of your own data today. Well, I'm not seeing any questions, David, so we can probably move on the slides, or if you want me to take it back, or if you still got it.
I've got it for now.
Yeah.
So this is just kind of a summary of the IntelliCredit offerings. Obviously, today we focused on the loan data analytics quite a bit. The annual review platform is also available. So our portfolio analyzer subscribers, we typically just lump in annual review, where you have a platform to do annual review. And then the internal loan review, like I mentioned, Mitch Moss from Outdoor Bank, there's a video or a webinar recording where he covers some of his experience using this tool. And then, of course, IntelliCredit also has third-party loan review services that are tech-enabled as well, but delivered by a very experienced and robust review team. So Sean, did you want to take over here, or okay? So
No,
yeah,
you tell me when you're ready.
Yep. So IntelliCredit, this was our 2023-24 in review. So we're really a nationwide firm. We have these numbers are actually a little low. So this is a little outdated, but we're about around 100 clients in about 34-ish, something in that ballpark states. So very much a nationwide firm. We had 102 loan reviews conducted in 2023 and on down the line. So lots of robust things happening in IntelliCredit, although we were only founded in 2019, which I guess has been a little over 5 years now. You can check out our YouTube, where we have all of the recordings from IntelliCredit, Coffee Talks and webinars, as well as Quick Rate Coffee Talks and webinars as well. And all of those are organized in particular playlists for the category or subject matter that they pertain to. So December 5th at 10 a.m. Eastern, I believe that's a Friday, we have a quick analytics coffee talk that Sean will be on with Steve. Is that right?
Yep, that's correct.
Then I guess the very next day, so then December 5th must not be a Friday.
Yeah.
We have the Cecil coffee talk also at 10 a.m. So back to back, got a double header there. But thank you for attending. Again, if you're interested in the free trial, you can email info@quickrate.com or myself directly. And yeah, thank you for attending. If we'll hang out for just a few minutes if there are any more questions in the chat, more than happy to address those. But other than that, everyone have a great morning and a great weekend.
Thanks, everyone. Have a great weekend.